Are you able to see my screen?
Yes, sir.
Yeah. So today we are going to see about two chapters, chapter 7 and chapter 8. So both the chapters are mostly theoretical. We don't have more of practical problems or solutions to be discussed. It's more about, you know, they talk about applications, they talk about how the contracts, what are the parts of the contracts, contracts in the sense the insurance policy, how the proposal form will look like. Proposal form in the sense it's application form and all the other things. So basically, it is more about more theory, and I'll make sure like it's going a little bit interesting. But theory, I cannot do anything. You need to understand. I'll explain whatever it is, the main content of the chapters and the main, uh, the headings, important terminologies, everything we'll discuss. And if we have any questions, we'll close and then proceed further. So chapter 7 will be little lengthy and chapter 8 is very short. Let's see whether I can close it this by 8:15. So most of the points that we are going to see in chapter 7 and 8, I think you'd have read this in IC01 if you already taken, or if you are taking IC01, you would have you could have see overlap between the points what we are going to discuss in chapter 7 and 8, the same points that have been covered in IC01 syllabus as well. Uh, so hopefully it will have a better understanding because most of you people here would have done their IC01 maybe in the last quarter or doing that one in the current quarter. So life insurance contract. So fundamentals of life insurance contract. So life insurance is a contract that we have already seen. It's a contract between two parties. One party is the person who is uh, applying for insurance. The another party is person who is approving that application. So that is the insurance company. One is the person who is going to be get insured. The another one is the person who is going to insure them. That is the insurer, insurance company. So the contract is between the applicant and the insurance company. So when you say it's a contract, it's a legal contract. Legal contract in the sense it can be taken to the court if there is any disputes between the two parties. அவங்க ரெண்டு பேரும் வந்து சில பாயிண்ட்ஸ்ல ஒத்துக்கலன்னா they can take it to the court and court can take a decision on the disputes. So this is the legal contract. That means it can be contested under legal law. So usually it will have proposer. Proposer is the policy holder. Policy holder will be the life assured most of the cases. Okay. Some cases, in case of child policy, the proposer and the policy holder will be different. The parents, the father or the mother, they will be applying the policy for the child. So they are the proposer and they will be holding the policy. They are the policy owners because any changes, the child is a minor, they cannot do any changes. So policy owner will be the proposer. The same person will be the policy holder, but life assured will be different. Life assured will be it will be on the life of the child. So in very rare scenarios, these three will be different. In most of the scenarios, the proposer, the policy holder, and the life assured will be the same. So elements. These elements, same words you have seen in the IC01 syllabus. So there are 7 elements, important elements that they will cover. It's an important question in IC01 as well as in IC02. So what are the elements should be there for a valid contract? Contract வந்து கோர்ட்ல எடுத்துன்னு போயிட்டு லீகலா வேலிட் அப்படின்னு சொல்றோம்னா what are the elements should be there? So all these elements should be there. So capacity to contract. Capacity to contract means the person should be not be a minor. They should have enough knowledge that they are entering into a contract. So they are not to be on unsound mind. They are not mentally ill. So uh, they are in sound mind. They are not minor. So they can apply for insurance. And the insurance company usually they will be in sound mind, though they are approving that. So the parties, two parties of the contract should be not minor and they should be in sound mind. So this is the first element. Second element is free consent. Free consent is willingly they are going to accept or apply for insurance. It is not under any force. Any force means somebody, if you are compelling to take insurance, that is not a free consent. Free consent is willingly you are accepting it, not by threatening or not by blackmailing or anything. So this is the second element. Third element is offer and acceptance. So for a contract, there should be some offer. That is, somebody should give the proposal and somebody should accept it. Then only the contract is legal. If there is no proposer, only one person is writing a contract means that is not actually a contract. So it should have a proposer. Proposer is the applicant. And somebody should accept. The insurance company is the acceptor. So this is the third element. Consideration. Consideration is, it should not be, something should be there between two parties in an exchange so that the contract is becoming legal. You cannot, without any exchange, there is no contract formed. You know, நான் உனக்கு ஃப்ரீயா பண்றேன் நீ எனக்கு ஃப்ரீயா பண்ணு அப்படின்லாம் எதுவுமே கிடையாது. So it should be some consideration. In insurance company, the consideration is premium. The applicant is giving the premium, the insurance is giving the claim. So this is give and take. So this is the consideration. So this is the fourth element. Fifth element is legality of object. So whatever you are going to do, put it into the contract, it should be legal. You cannot put something illegal substance like cocaine, heroin and all into contract. You cannot, when you are transporting some illegal goods, you cannot put insurance for that. Okay, so that is again illegal. So legality of the object, something you are applying for insurance, that should be legal. So like you have a bike, that bike should be your own. So you are applying for an insurance. That is legally correct. If somebody having a stolen bike and he stole it from someone and he wanted to apply for insurance, that is illegal. We cannot do that. So legality of the object. Then consensus ad idem. Consensus ad idem is, that is a Latin term. So both parties must agree on the same thing. That means, when they are saying, I'm going to pay premium 10,000 rupees and you are going to give me claim 1 lakh rupees, that means they are accepting that amount. So both the parties, they understood, I'm going to pay 10,000 rupees every year without fail. That is they are agreeing. And insurance company is agreeing, if claim happens, I will pay 1 lakh rupees. That is they are agreeing. So they are on the same page. If there is some misunderstanding, if the uh, applicant thinks that he should only pay 10,000 rupees only one time, not every year, then there is some disconnect. There is some misunderstanding. So it should not be there. So both the parties should understand the agreement clearly. What are the things to be done? And other party also should understand what are the things to be done. This is consensus ad idem. Capability of being performed. So any promises that they are making, it, it should be doable. Doable promise only you can put it in a contract. Not imaginary promises, not undoable promises. For example, if somebody cannot promise, if a person dies, I will make him wake up after his death. We cannot do that. That is not a contract. That is impossible. We cannot put it into the contract. Contract is capability of being performed. I am paying 10,000 rupees. I am capable of paying premium. You are paying 1 lakh rupees claim. That is, you are capable of paying that claim. So both are capable. So like that, it should be capable of doing something. So that should be the contract. Imaginary செய்ய முடியாத விஷயத்தெல்லாம் வந்து contractல போட்டு we cannot demand that you should do. That is not a legal contract. Utmost good faith, that is uberrima fidei. Uberrima fidei is both the parties to be trustworthy. There should not be hiding any information, and they should be very open, disclose all the information. So that is the most important thing, good faith. If you are applying for insurance, life insurance, and you are hiding all the diseases that you are having, that means you are not in good faith. That should not be there. Insurable interest. Insurable interest, we already know that there should be some financial interest. If something happens, you should have financial loss. Then only insurable interest is there. So you cannot put an insurance for your neighbor's bike. If that is lost, and you are not going to lose anything, only your neighbor is going to lose their bike. So insurable interest should be there. The financial loss should exist. Then only we can do insurance. So any questions on these elements?
No, sir.
Great. So insurable interest in life insurance. We have seen generally. Now we'll see insurable interest in life insurance. Who has insurable interest on whom? I think we have already seen this elaborately. They have given very briefly here. That is, I have unlimited interest, insurable interest on my life. I can take a number of insurance policy on my life because it is my life. Nobody can question that. And somebody, my dependent, my spouse has a insurable interest on me because I am earning, I am giving some money to them to run the family. So they have some insurable interest because if I'm not there, they are going to have some financial loss. So this is what unlimited insurable interest. Unlimited insurable interest exists in two areas. One is person on themselves and on the spouse. This is an important exam question. Limited insurable interest means up to some extent, up to some period, they have a interest. That means employee on a key employer. Some very good manager is there, and without that manager, there will be a very big loss for the company. That means if the manager is dead, then the employer will have a financial loss because nobody is there to run the business. And if he can hire one more manager also, but it will take little time. Until then, the business will have loss. So employer has a limited insurable interest on a key employee. This limited means it is to a limited period. Only when they are in the employment, they can have an insurable interest. If the manager resigns and go, then there is no insurable interest. So it has a limited insurable interest. So creditor and debtor. Creditor and debtor. Debtor is, the கடன் வாங்கினவங்க கடன் கொடுத்தவங்க. The person who lends money, who gets the money for loan. Okay. So they have insurable interest on them up to the amount they need to pay. For example, person A gets 1 lakh rupees money as a loan from the bank, from HDFC Bank. So HDFC Bank has a limited insurable interest of 1 lakh rupees only. They cannot have 10 lakh rupees as an interest, insurable interest, only 1 lakh rupees because that is the amount. Up to which period? Up to the amount is being paid back. After that, there is no insurable interest. So this is insurable interest limited. So insurable interest எப்ப இருக்கணும்? that must exist at the time of proposal, not at the time of claim. This is very important question. Insurable interest should be exist at the time of proposal, not at the time of claim. Okay. Only one exception is marine insurance. Marine insurance always is different. So it is an exceptional. Okay. Only at the time of proposal, they will see the insurable interest, not at the claim. So life insurance application process. So how the insurance is being applied and what are the things, documents that we need to have for application that we'll see here. So prospectus. Prospectus means, you have seen pamphlets, lot of pamphlets given by the insurance company in the public. They will distribute the pamphlets. The pamphlets will say like the name of the plan, Bima, Bima insurance, uh, Yojana insurance, like that, different names and all you would have seen. It will say if you pay 25,000 every year for 10 years, after 25 years, you will get 25 lakhs. So this is a kind of advertisement. So the advertisement is the prospectus. So you cannot put anything in the prospectus. It should be, the prospectus should say only what the actual plan says. So it is a document issued by the insurer. Okay, it can be electronic or physical. It is to sell or promote the insurance product. Okay, it should have UIN, unique identification number, that is plan number. Every plan, okay, if an insurance company develops a plan, that plan they need to submit it to the IRDAI, and IRDAI, they will review the plan and then they will approve it with some unique ID. That unique ID is UIN number. That UIN number should be there in the prospectus document, that pamphlet document. And it should also have the benefits, and it also should have the terms and conditions. Everything should be there in the prospectus. Proposal form. Proposal form is application form. We have a physical application form, paper. We have a online application form also. So this application form is filled by the person who is applying. That is the proposer. If I am applying, I am the proposer. So I am applying for insurance. So it will have personal statement of health. It will ask questions, whether I am a smoker, whether I am drinking alcohol, whether I have any kind of heart disease, like that. So you need to answer that. The proposer should fill and sign the form. The agent should not fill. Sometimes the agent itself, they will ask the questions and they will fill and send it. That is not legal. Actually, the proposer should understand the terms, what they are asking in the questions, and they should fill and they should sign. Okay. And agent report. Agent report is confidential report, and they will call it as a confidential report. So a person is coming, for example, a person is a agent, is coming and approaching you, and they are saying we have a new plan for our company, HDFC Life Insurance, and they are saying, okay, this is the plan, and you are saying I am accepting that, and you are filling the application form. And while you are filling the application form, the agent will ask some random questions to you to understand whether you are giving a correct answer or you are giving some lie or you are lying. So whether you are telling the truth or not, they will try to understand about your proposal form by asking some random question, cross questions, like that. And they will prepare a report separately and they will send it to the insurance company about you, about your lifestyle, health, financial status, and moral hazards. Moral hazard means if you are cheating, that is moral hazard. So they will submit a separate report. They won't disclose it to you. உங்ககிட்ட சொல்ல மாட்டாங்க. They will separately, confidentially prepare this report and they will send. And that will provide some important information for the underwriter about your proposal form. And they can take a decision on that. So proposal form has application, personal statement of health, and it will have agent report and confidential report. Any questions so far?
No, sir.
Okay. So non-medical schemes, medical scheme. Non-medical scheme is usually in life insurance. When you apply, they will go for medical test. So to at least for lab or physical exam with some doctor. There are some applications, there are some policies where the medical test is not needed. It will be for, those kind of plans will be available in most of the insurance company. It will be for very small face amount, like for 5 lakhs, 10 lakhs, or for younger age people. They will have non-medical scheme. Non-medical scheme, you just you give your self declaration. நீங்க என்ன சொல்றீங்களோ அதை அப்படியே நம்புவாங்க. So that is by, if you say non-smoker, yeah, they accept and they will give the policy. So this is called non-medical scheme. So in this non-medical scheme, no medical exam is required. Okay. So, lot of government schemes are there for bank staffs. Lot of, plans are available in this non-medical schemes. PLI is postal life insurance. It also has non-medical scheme where qualifying means they will have some age criteria. They will have some amount criteria. If you qualify, you can go for this non-medical scheme. Special reports. Special reports are usually, when somebody is applying, they will have this application and they will ask for basic lab test. They will ask for basic physical exam, something like that. There are some scenarios where special reports are needed for approving your plan. Special reports may be needed in terms of if you are asking for a very high face amount, or if the age of the person who is applying for the insurance is very high, maybe after 60 you are applying for insurance, so they may ask for some special reports. High risk plan, and if you say like if you are disclosed some major illness, an agent has given some bad report about yourself. So in these scenarios, they will ask for special report. They may ask for some, kind of ITR returns for the last 5 years, or they can ask for, any medical officer, special examination. And if your age is high, they will ask you to go for some treadmill test. Then only we can approve. Like that, they can ask for some special reports. So age of proof. So age of proof is mandatory because with the age only every plan premium starts. It's decided. If your age 25, your premium may be 1,000 rupees. If your age is 40, then your premium may be 4,000 rupees. So it changes with the age itself. So age is very crucial. So higher age, higher mortality and higher premium. Okay. So standard age proofs are birth certificate, your school TC, passport, PAN card, Aadhaar card, anything you can give. There are non-standard age proofs like horoscope. Some older people and all, like if you ask my grandmother and all, that time there is no birth certificate and all. They won't have. They will give their own date of birth. And though that date of birth, we cannot believe also. They will say they won't remember. So those kind of, elderly declaration and horoscopes and all, they will accept. But at the time of claim, they will re-verify it. So for non-standard age proofs. Any questions so far? So far we have seen, in application and acceptance. In application part we have seen, not in the acceptance part. The application, we have seen what are the major elements of life insurance contract. We have seen what is insurable interest. We have seen the life insurance application process. அதில் என்னென்ன இருக்கு? What is prospectus? What is proposal form? What is non-medical scheme? What is special report? And age proof. Now we are going to see about the assessment. So assessment is done by the underwriters usually. The underwriting, now the risk assessment has been automated for many of the policies. Still underwriter is required to do a risk assessment. So what is a risk assessment? What are the things they will see in the risk assessment? So medical underwriting, basically they will check height and weight. So because if you are obese or if you are very low weight, low BMI, that means you may have some, you are in at some risk. If you are in normal BMI, then your risk is less. So they will check for height and weight. They will check for physical exam, body exam. Usually they will assign a doctor and doctor will check all this. They'll check for reflexes, pulse, heart sound, physical exam, physical impairment, deformity. If you have seen part 2 of the insurance application, the doctor would have filled 3 BP readings will be there, height and weight, chest expansion they will measure. So all these things, the doctor will do an exam and they will give the report. They will also check for family history, for any hereditary history. பாரம்பரிய ஏதாவது வியாதிகள் இருக்கா அப்படின்ட்டு they will check it. Hereditary ailments. And occupational hazards. If you are mentioning you are a pilot, then there is some risk because you are continuously flying. If you say if you are working in a coal mine underground, then there is a risk of drowning. So if you are working in height, if you say you are a painter and you are always work in a tall buildings, then there is a risk of height. So occupational hazards, they will check. So this is about medical underwriting. It's a part of underwriting. Then we have financial underwriting. So financial underwriting is, they will check whether you are eligible medically and also they will check whether you are eligible financially. Financially means if you are applying for 1 crore rupees insurance policy, that means you should have enough earning so to justify that amount coverage. So if your yearly income is 1 lakh rupees only, if you are applying for 1 crore rupees, they won't approve. They will say, see, if you are now earning 1 lakh rupees only, now your age is 30. Even if you live for 30 years, we can multiply that by 30. That means maximum 30 lakhs I can give, not 1 crore, because your earning is very less. And if I calculate your earning will increase every year, maybe you can go for 40 lakhs, not more than that. So your amount should justify. So for that, to justify whether the amount you have applied is correct or not, they will do a financial underwriting. So financial underwriting is relationship between the risk cover. Risk cover is amount you are applying versus your current income. So both they will check. They will also check moral hazard. Moral hazard in the sense they will check your lifestyle, integrity and reputation. I have an example below. So moral hazard, you cannot measure it. For financial risk, you can ask for income tax return. They can ask for salary slip. If you're a business owner, they can ask for, business income, last year returns income. They can check it. They can physically check it. ஒரு பேப்பர்ல அந்த amount இருக்கும், you can check it. It's a document. But moral hazard, whether you are cheating or not, they cannot check it. Okay, for moral hazard is more subjective. So if you are suspecting moral hazard, then your proposal will be rejected by the underwriter. So how you can check an moral hazard? Example, a person has a stable job. He's not switching job frequently. He has been in the same job or two jobs in the last 10 years. He is honest in disclosing everything. He has said that he is a smoker and he has said he is a non-alcoholic and he has a good payment history. They will check, CIBIL scores. They are paying all the loans correctly. There is no delay in loans. They are paying all credit card bills correctly. Everything they are paying. That means by this understanding, the person A is very good. He's honest. He's not going to cheat insurance company because he has not done any mistake before. So person B has a history of insurance fraud. He has applied. When you are checking the history of the insurance, person who is applying for the insurance, you can see there is one insurance taken 5 years before and he has cheated in it. The insurance company cancelled that agreement after 1 year because they found it. And before 2 years, there is some loan repayment issue and they are not repaid their payment. And in the previous year insurance policy, they have mentioned it as some diabetes present, and now in your application form, they are saying no diabetes. Okay. So like this, by the history, there is a lot of contradicting information in the patient with the applicant. So when you see a contradicting information and the person has done some fraud previously, then you should be very seriously examining the application. You should not just like that approve that application because it is very risky. Okay. So what is the underwriting decision they will take? Underwriting decision is very simple. Okay. Acceptance at. So they have applied. We have seen the application. Now we have seen the underwriting. Acceptance. We have seen the underwriting. We have seen medical underwriting. We have seen financial underwriting. So now we need to decide what are the things we can decide. We can accept the offer as it is. We can modify the offer, or we can hold the offer, or we can reject the offer. 4 possible outcomes are there. Okay. First, acceptance. So they are saying everything is normal. No disease, no smoking, no alcohol, nothing. The person is very healthy. So you are approving it as in the ordinary rates on the normal tabular rates. The next outcome is the person is saying that he is working in a coal mine. So risky operation. And you are seeing little risk in that operation, but you cannot reject it because he is continuously working and he has no other issues. So now you need to accept it, but you cannot accept it with normal rate. 1000 ரூபாய் premium வாங்கணும்னா 1000 ரூபாய் வாங்க முடியாது because there is some increased risk. So you are saying I can accept the risk, but I am charging extra premium. So instead of 1000 rupees, you need to pay 1500 rupees as a premium. So this is called accepting with modified terms. Even you can change, the sum assured, or you can do exclusion clause and other things. We'll see, we have seen extra premium. Now we'll see what is exclusion clause. Exclusion clauses. Now you are asking the applicant to pay extra premium, 1500 rupees. The applicant saying, I cannot pay 1500 rupees. I can pay only 1000 rupees. Whether you can accept the risk or not. Yes, still you can accept, but you can have some exclusion clause. You are adding one more document called exclusion clause stating that the additional risk. இங்க என்ன additional risk என்ன பார்த்தோம் இங்க? Coal mine la work பண்றது additional risk. So the additional risk you are excluding. What you are saying is, if something happens in your job, I'm not going to pay the claim. If something happens outside the job, I'm going to pay the claim. But still you can pay the 1000 rupees as a premium because I'm excluding it. So this is called exclusion clause. Reduced premium. So for example, the same coal mine worker is applied for 50 lakhs rupees and he is saying 1000 rupees only I can pay. I cannot pay 1500 rupees. Now he is saying you cannot exclude from my job because my job is, I will be working in this job and something happens to my job, still my family will have some financial loss. So you need to cover that. Now the third option is we can reduce the sum assured. For 50 lakhs rupees, you are going to charge 1500 as an additional premium. Now he is saying only 1000 rupees he can pay. So for that, you are going to reduce that 50 lakhs to something like 35 lakhs or 30 lakhs. You're saying I'm not excluding your job. I'm not charging extra premium, but instead the amount, the total amount of insurance, I'm just reducing to 30 lakhs. So anything happens, they will get 30 lakhs, but same premium. So this is called acceptance with modified terms. Guys, any questions? This is very important to you to understand, then only you won't forget. Any questions? Clear up, Purnjicha?
Yes, sir.
Okay. Postpone. Postpone is, we'll see another example. The person is applying for insurance and he is saying he recently diagnosed with CAD, coronary artery disease, and he's underwent bypass surgery. Now, he has got treated with CAD, but he got treated recently before 6 months. Now, still the risk is there because before 6 months only the treatment has been done. He can get another heart attack anytime if he is not following the treatment correctly. For that, you cannot reject the claim because the risk is treated. The CAD has been treated. The risk is treated. So you cannot reject the claim. You cannot charge extra premium also because they are doing correctly the treatment and everything. But still there is some risk. So now you are saying, see, now only you got treated. I cannot give the insurance now. Maybe I will wait for 2 years. Okay. And you can come back and apply for insurance again. At that time, I will see how is your coronary artery disease looking like. Then I will give the policy. If it is stable, I will give the policy. This is called postponement. Okay. The final thing is rejection. Rejection is whatever modification we do, even if we postpone, the risk is not going to change. The risk is still there. That means you are going to decline the policy. Okay, so there are 4 possible outcomes in the underwriting decisions. Finally, we are going to see free look period. Free look period is, there is a period. You are applying for insurance. The insurance company has accepted and sent that document to you. Now you are reading the document. After reading the document, everything is new. They said, all the conditions will be covered, but they have mentioned CAD is not covered, multiple sclerosis is not covered in the policy document. And there are a lot of misunderstanding between you and them. Yes, still you can return the policy and get your premium paid back. So this is called free look period. Free look period is, இப்போ நீங்கள் அமேசான் ஆப்லாம் வச்சுருக்கீங்கன்னா அவங்க ரிட்டர்ன் பாலிசின்னு ஒன்று வச்சுருப்பாங்க. ஸோ 30 டேஸ்க்குள்ளே நீங்கள் ரிட்டர்ன் பண்ணலாம். 40 டேஸ்க்குள்ளே ரிட்டர்ன் பண்ணால் உங்கள் காசு நாங்கள் அப்படியே திருப்பி கொடுத்துருவோம். இந்த ப்ராடக்ட் பிடிக்கலன்னா நீங்க திருப்பி கொடுத்துடலாம் அப்படின்ட்டு. ஸோ தட் இஸ் கால்ட் ஃப்ரீ லுக் பீரியட். இஃப் யூ டோன்ட் லைக் த ப்ராடக்ட் யூ ரிட்டர்ன் இட். ஸோ they will return the premium, but they will charge some amount. They will refund all the premiums after reducing stamp duty, because stamp duty they paid to the government. Medical exam, anything, if any medical exam they have done, like lab test, treadmill test, doctor fees and all, they will deduct. And proportionate risk premium also they will deduct. Proportionate risk premium is, I have an example in the next chapter on this one. I will explain it. Because if you are returning after 15 days, the 15 days you are under insurance. So that 15 days amount they will deduct and they will pay it. So this is very important. 15 days is the return policy, free look period. If you are you know, directly going and applying an insurance policy in the insurance company and getting that physical document directly from the insurance company, it is 30 days. If it is a distance marketing, you are applying in an online and the insurance company is sending the document in courier, because courier it will take like 2-3 days to come, and for you to return back it will take 2-3 days to return back. So all this thing is there. So distance marketing it is 30 days, direct marketing it is 15 days. I think we are done with chapter 7 on time, 2 minutes before itself. Do we have any questions? We can discuss this.